the reason it's so difficult, I mean, it comes down to kind of economics and market failures where there's, decades of things that have contributed to everything costing too much. I mean, it comes down to it costs too much. So the price of land is very high, and you can attribute some of that to the downzoning that we've seen over the years. And while we're reversing some of that downloading, and particularly in the city of LA with various density bonuses and overlay programs, it's a supply and demand thing. When you've downzoned land, there's less land where you could build, and it drives the price up. There has long been also, the entitlement risk, which again, we're dealing with in different ways, with some CEQA streamlining happening at the state and the density bonus programs, making it easier to build. But over the years, that cost to do entitlement and the risk and then the related lawsuits have driven up costs overall for transactions. We know that the cost of labor, construction labor going up, materials going up. So a lot of it is these economics, but all these factors coming together have really dramatically escalated the cost to build.
You really should think about it over how much incremental return you're getting over something that's risk-free. And the development of housing, given where the cost is today and the risk associated with it, is not much more return than you would get if you just parked your money in a treasury bill. And that's fundamentally why we're struggling, even though one would say, well, there's so much demand for this housing, that upfront cost and the uncertainty associated with fluctuations around commodities and labor and new regulation demands more of a risk premium over other products, where investors just aren't comfortable putting their money behind real estate.
Jen and I both went to Vienna to study their social housing model, and something that really stuck with me that I took away, and they have a much more in-depth kind of involvement in the market, in the housing market, but they look at the importance philosophically of giving an object versus a subject subsidy. A Section 8 voucher is a subject subsidy. You will have to do it forever. It's infinite, the Section 8 voucher. In theory, an object subsidy, like a tax credit, you create a permanently affordable unit. So you do a one-time upfront injection into a building, and now that unit is always affordable, and you don't have to continue. I mean, there's recapitalization, but I just want to center us philosophically about the program before we say blow everything up.
A lot of the money in the ecosystem for just housing and real estate investment comes from insurance companies, pension funds, endowments. They're not big risk takers, and they're not demanding outsized profits. I mean, these are people who are looking for actuarial predictable returns, but what they can't risk is losing money.
And we could choose to grow sustainably by using our public dollars. We can reduce the cost to build if we reduce the cost of infrastructure, right? So one of the things that makes land expensive is if the electrical grid does not have capacity to support your project, you got to upgrade the whole thing. That could be $1 million. So I want to see a future where we're planning for sustainable infrastructure at a district level, where we're planting the seeds so that we have better sustainable infrastructure, and we reduce the cost to build housing, and we have that housing built sustainably without each individual project carrying that burden and cost. But that's where we invest. So that's another vision I have for the future that I hope for.
And Jennifer, Keith, your vision.
One thing I'm hoping for is open sourcing information more. I can't tell you how many times I have to call up other developers and say, hey, what are you seeing in costs right now? Where are you getting your insurance? If there were a better repository of all this information, what's happening right now? I don't understand this new policy. If we could open source just information more broadly, it would help so much. I think that's like a very easy tech solution, hopefully in the near future. And then finally, from a policy standpoint, to help ease that risk around future regulation, if we could have sort of a grandfathering, once you're in, you've opted in to a set of regulations. There's similar things in the LIHTC space, because those projects can't afford future regulation that might reduce rents significantly because they run at such thin margins. They can't reduce. I'm like, why can't we have that for existing buildings? That would take out a tremendous amount of fear from the money sources around, well, we can't predict what will happen 20 years from now. So I'm hopeful that there's some way to take that risk out of the equation. But I'm still, despite everything, optimistic. We can figure this out.